Pleasure.
Now, all major central banks warning against the possible ramifications of Brexit, with them saying that they'll have ammunition, if needs be, to deal with any fallout that may happen on the financial markets. What do you read this to mean? And also, it's increasingly looking as though that people will decide to exit out of the EU. So what will the ramifications be?
Yeah, I mean, certainly the polls in the last month picked up quite a lot for the Leave campaign. I mean, as far as a central bank event goes, it might very well be a case that this is Britain's issue, or it's quite possible that this is Britain's vote and Europe's problem, in which case you have a wider central bank problem. Because, of course, if you have people or banks running out of the euro, well, where do they run to? And that will be the dollar, the yen, the Swiss franc, and so on. So it's certainly, I'm not surprised that central banks are on a footing to deal with that.
But one of the things that's been discussed, obviously everything is all speculative right now, is that should the UK vote to exit the EU, what will happen immediately is that there'll be a depreciation of the pound, quite substantial, and then they will go into recession. And there's talk that some companies that are headquartered in the UK may decide to go to Europe because most of their market is in the European Union as opposed to the UK.
Yeah, certainly that's a concern with it being a very large financial services economy. However, the rest of Europe hasn't really made itself that attractive as a destination. So you might have a push from the UK, but you don't have a pull from Europe. I mean, if anything, Switzerland would be a more attractive destination, or Luxembourg, than anywhere else in Europe. So it's potentially neither Europe's gain and possibly England's loss in that particular case. As to whether it would go into recession, that's difficult to say. I mean, we'd have to see how does that affect confidence, and particularly the likes of capital spending and so on. Because the key question of what happens now is, well, okay, Brexit's on the tables, now what happens? You know, in the number of times that we've seen an exit vote in the past in the EU, and that's happened in Denmark, in the Netherlands, and in France. So basically, it went to the polls again a second time after the EU made a whole bunch of concessions, and it went through the next time. We may very well see that situation play itself out.
I want to look at Japan. The finance minister in Japan has complained that there's been speculation against the Japanese yen, but my take when I look at what's been happening is that there's been risk aversion on the markets, and investors have decided to plough their money into what they consider to be safe haven assets, like your US treasuries and your Japanese government bonds. So which is the truth of it? And when they talk about the possibility of intervening in the currency markets, does it really ever pay off for a central bank to try and intervene?
Well, I think it's part of a much larger parcel. I mean, intervention can be tricky, but of course they're now in the situation where they want to raise liquidity anyway. So on paper they could actually issue as many yen as they like and buy dollars, but that of course has political implications, namely currency wars. And effectively, in passing a comment like that, they're countering sentiment and statements from US politicians that no, the yen is not overbought. But the other factor is that the yen is appreciating a deflationary environment, and that tends to be very, very strong for a currency. Now, I mean, the last CPI print was minus 0.3%, despite a target of 2%. So Japan is not inflating at all. I think part of that reflects oil prices as well, but they're still struggling to get any kind of inflation going whatsoever.
On the issue of oil prices, which you touched on just now, it's hovering around $48 a barrel, seems to be resisting going back to the $50 mark. Is that really due to supply-demand fundamentals?
I think some of it is. As far as China goes, they have been massively building stocks at the rates in the past few months of something like 700,000 barrels a day. So their stockpiling as well is also potentially starting to put a cap on the price there as well. So while we've seen stocks in the US fall, globally it's a different situation. I think we're looking at the situation where the oil price has basically leveled out at $50 for a while. It does bring back a certain amount of shale capacity in the US, and I think we're going to see some churning at this level before it finds some resolution.
Let's look at a local stock. Ellie's, we see that a big fund manager, Alan Gray, decided to buy up 10% of Ellie's Holdings, which has been going, it's an electronics company, it's been going through some problems, and it's now going through a turnaround strategy. Was that a good investment by Alan Gray, and is that why we're seeing the stock up 18% today?
That's an interesting one, because Ellie certainly has in the past been a very innovative company, a great product line, and it was sitting on a book value post the rights issue of about 130 versus a share price of 59 cents. So on paper a great buy. But some intervention probably would be required. I mean, they did find themselves in an overgeared situation. And of course, it's a consumer discretionary stock in an environment where South African consumers are very stressed. So I suspect that there's probably some expectations in the market that Alan Gray would intervene a little bit on this company. They've certainly proven themselves to be more actively involved than other asset managers.
Would you follow the herd and jump in there and buy some stock?
Might be a cheerful punt, who knows?
All right, we're going to leave it there. Thank you very much.
Pleasure.
That was Warwick Lucas. He's from Galileo Capital. After the break, Francis has more business news for you.